I'll give you a bit of bad news and a bit of good news. The bad news is I think that it's going to be a really tough, sticky time for the US consumer probably over the next 18 months. And so I tend to think that through the course of this year and through 2023 and possibly even a little bit of 24, it's going to be a grind. Unemployment will go back up. Inflation will be sticky. Real earnings will shrink. Consumption will ebb, and earnings will not be that great.
Chamath Palihapitiya is a Sri Lankan-born Canadian and American venture capitalist and the founder and CEO of Social Capital. Palihapitiya was an early senior executive at Facebook, working at the company from 2007 to 2011. Following his departure from Facebook, Palihapitiya started his fund.
In this video, Chamath talks about the coming recession and the endgame for Vladimir Putin in the Ukraine war. Make sure to watch till the end to find out what we are in for.
Because I really want to make sure that it's very clear and on the record what I said almost an entire year ago. Let me put crypto in the context of the markets and where we are today at the end of the week after, Q3 earnings in November of 2021. We have the stock market at absolute all-time highs. We have crypto at absolute all-time highs. We have the art markets. I don't know if you guys saw Phillips and Christie's and Sotheby's this past week at absolute all-time highs. We have inflation at a 30-year high. We have 10-year break-evens at a 25-year high. We have, $1 point some odd trillion that we just approved last week, and we're still horse trading on another $1.8 trillion of stimulus that we're going to put in. And I think the most important thing, which is the two most important founders of our generation, the two smartest people who have really consistently won, Elon Musk and Jeff Bezos, have collectively sold more than $11 billion of their holdings this year alone. And if you can't take all of that and decide for yourself what's right for you and your family, you're doing yourself a disservice. If the smartest people in the world are now selling their core holdings that they told you they would never sell, and you are not reconsidering your position on things, you're either much smarter than them or you're being really, really reckless.
Please remember to like and subscribe and hit the notification bell to be notified when we bring out a new video.
I think that we are starting a bottoming process for the equity markets. And I think that by the end of this year or the early part of next year, most of that will be done. And the reason is that, the equity markets, I think, do a reasonable job of one, looking at the bond market, and then two, looking 6 to 9 months into the future and pricing in that future today. And so by the end of this year, beginning of next year, I think that we will have kind of bottomed and we'll start to build a base. The thing to remind us though is that, let's just say a stock goes down 50%. Even if it rallies 50% from there, it's still 25% off from where it was.
Yeah, people don't understand that.
And people don't understand
how hard it is
that.
to climb back up the mountain.
So I would just think, tell people that, I think that David is right. I think that it's we're going to feel this for a while. This inflation, as I've said for a long time, is going to be sticky and persistent. Excess money because of loose financial conditions distort what true supply and demand should be.
Got it.
Right? And excess money can come from the government. But in this case, excess government money went from the government into the hands of individuals who then participated in the public markets, and they distorted what it all looked like. And so there was a lot of purchasing activity that was propped up by what seemed like an endless supply of free money. And so now that money is getting taken out, we don't yet know what the real equilibrium economic growth rate should be, because you have to remember, we have not seen an era without federally introduced spending, without federally introduced forms of quantitative easing since the great financial crisis. So we have been propping up our economy for 14 years straight now. So we have distorted the prices of bonds and fixed income. We've distorted the prices of equities. We've created an asset bubble in crypto out of nowhere. And now we have to do the hard work of figuring out what the real supply demand is in the economy. We've never in the history of America ever had CPI print above 4.5% or 5% without inflation being brought down by having Fed funds not also be greater than 4.5% or 5%. So at some point, inflation will turn over and we'll print 6 and 7%, but that's still not below 4.5% or 5%. And right now, our target Fed funds rate is between 2.25 and 2.5%. So we could still be only 50% of the way there if inflation remains at 4 to 5%. And this is what I think market participants don't want to hear. They don't want to hear that there has to be a meaningful form of tightening. And politicians don't want to hear that. The White House for sure doesn't want to hear it. The problem is that if Powell caters to too much of that feedback, he's not going to do what he's supposed to do and why he's put in that job. So because Powell was catering to whatever pressure he's been getting, and he must be getting some severe pressure from the White House, those were really dovish comments. But what is the problem when he is dovish? Well, the practical reality is a couple of things. Number one is typically the yields of long-dated bonds go down, okay? That essentially tells everybody else to reprice assets. What does that practically do? It makes the cost of borrowing roughly cheaper, okay? It makes the price of equities, particularly ones that are far out on the risk spectrum, so specifically let's focus on NASDAQ and crypto, right? Tech stocks, biotech stocks, and crypto stocks go up much more aggressively. So what has Powell effectively done? He has synthetically created a form of easing again, right? Like his job at the Federal Reserve, if you think about the money supply as a pipe, it's to shrink the pipe to close off demand to get things in equilibrium. So even though he's doing this, by the language that he's doing, he's effectively allowing market participants to basically guess that the worst is over and now we're going to start to expand the pipe again. And so they go to the end state. So what he effectively did in one speech is basically put a pin at the end of this year and is telling the markets, I'm mostly going to be done. And if anything, I'm probably going to be cutting in the back half of 23. Go on your merry way.
I'll just say two things. One is that I think it's been made pretty clear that both India and China will not stand beside Russia if they do something like this. And I think that is important because they still are the two biggest purchasers of Russian oil. And so I think that matters a lot because you're talking about a lot of revenue that would go away. And then the second is, I mentioned this last week, and this may sound dumb to some of you, but don't sleep on the Russian mothers. Well, what happened this week was really interesting, which is that he calls up all these reservists. These reservists are now coming from the major cities of Russia. You're starting to see protests. You're starting to see young people saying, I don't want to do this.
Yep.
And who's that really activating? It's activating the moms. I thought that you were right this whole time, which is we're going to build a golden bridge. We're going to find a way to egress this guy. And I'm now sort of in the David camp, which is I think that the stated strategy of the Western alliance is essentially to cause him to make such a categorically catastrophic mistake so as to become a pariah, so as to either get overthrown or something. So I do think that on balance, the risk is now for things to escalate, maybe not in quantity, and I'll use this word in the wrong way, but quote unquote, like the intensity of it. So I think David's right. It's a lot of pressure to the economy, and we've never really we don't understand well what zero-sum decision-making looks like when it comes to stuff like this. We're going to build a golden bridge. We're going to find a way to egress this guy. And I'm now sort of in the David camp, which is I think that the stated strategy of the Western alliance is essentially to cause him to make such a categorically catastrophic mistake so as to become a pariah, so as to either get overthrown or something.
Do you think Chamath is right with his take on the markets and Putin? Let us know in the comments below.